Hello, my name is Steve Bigelow with the Candlestick Forum. The market indexes, although they're going up indecisively, we have a very clear indication of which stocks and sectors are moving with the greatest strength. This is a benefit of knowing what should happen coming out of a candlestick signal or pattern. The Dow, as you can see, after it broke out, has stayed above the T-line. T-line rule, very simple. As long as a trading entity stays above the T-line, the probabilities have to be assumed that you're still in an uptrend with a much greater degree of probability. So right now, this little J-hook pattern in the Dow, even though we're at all-time highs, is indicating that the investor sentiment has not changed. We're still heading higher. Same scenario over here on the NASDAQ. The T-line rule, as long as we're trading above the T-line rule, somebody the other day asked, should we be going to cash now that we're at all-time highs? And the answer is no. We're at all-time highs because investor sentiment is putting us into all-time highs. This allows us to pick out which stocks and sectors are acting the best. And this is based upon, we can see the exact timing when the electric vehicle sector came to life. Lucid, coming out of this fry pan bottom with a trend kicker signal, breaking out to the upside. That's your first clue that there's a lot of money coming back into this sector. We can see the same thing with the buildup of investor sentiment and a big fry pan bottom in QuantumScape. And you can see visually that this buildup is now breaking out to the upside. And this is the area where these patterns are going to give you the biggest percentage price moves. So anytime we can see that buildup, fuel cell, another one that broke out today, and you can see the fry pan bottom. Again, this is a buildup of investor sentiment. And if it's happening in one, it's happening in multiple stocks in that sector. That is a clear illustration that that's where investor sentiment is starting to come back into with great enthusiasm. The fry pan bottom has very simple confirmation setups. If you see a breakout at the level where the fry pan bottom started, that's where you want to be watching for the investor sentiment to be in its enthusiastic stage. Also, how long do you stay in a fry pan bottom? Use the T-line rule. As long as your fry pan bottom is staying above the T-line, you can stay long with an extremely high degree of probability your trade is going to work. So you can add all those factors together. We recommended Fisker today because 2+2 analysis is just merely adding all the visual aspects of candlestick analysis instantly. First of all, you've got a fry pan bottom. The alert that it broke out was confirming was on probably Thursday of last week. Then you had a doji that confirmed that breakout. And we recommended today because if it opened positive, what were all the elements that were telling us we wanted to be in this trade? First of all, your doji rule. If it opens positive after a doji, it's going to trade positive. Secondly, if it trades positive, more than likely today's trading range will be the same as that trading range, thus your doji sandwich. And it provides that much more confirmation that the pattern broke out through the 200-day moving average. You do not have to be a sophisticated technical analyst to analyze the common sense that is built into candlestick analysis. We know what the results are of pattern breakouts. We know what the results are of signals. And when you can combine that together, you're just dramatically improving the probabilities of being in the right place at the right time. You've got fry pan bottoms. You've got bobble breakouts as seen in Deere today. It failed, did a J-hook pattern, came back up. The probabilities of a bobble breakout is much more upside. You've got things like the best friend signal, which is a doji followed by a gap up, telling you there's more upside. A doji followed by a gap up, more upside, telling you that this level right here is not acting as resistance. So not only do candlestick signals and patterns tell you where the investor sentiment is going as far as sectors and stocks, as far as bullish trades, they work just as well on the bearish side. Gold stocks have been acting weak. You can see the sell signals. You can see the confirmation trading below the T line. The T line in itself is one of the most prolific probability factors of a price trend. If you see sell signals and a close below the T line, that is going to be, or that trade is going to be in a downtrend until you see a candlestick buy signal and a close back up above the T line. We are going to be doing a full 2-day training next weekend, not this coming weekend, November 13th and 14th. This is where you really get a grasp of how to utilize candlestick signals and patterns that produce extremely high profit trade results and then dramatically improve your probabilities of being in the correct trade at the correct time, and also how long you can continue to hold a trade until investor sentiment goes the other way. Join us 2 weeks from now. It's a 2-day full training. You're going to get a lot of information that you will utilize for the rest of your trading career. So as long as we're trading above the T line right now and the indexes, continue to stay long. That'll be it. We'll see you in the chat rooms.